All right, welcome to another session of the My Solo 401k Financial, My Community Daily Webinar Series. If you're on YouTube, please like and subscribe. Please chat over questions that you have. We're going to go through the questions sequentially. As always, the presentation is being provided for educational purposes only and should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. So let's go through some foundational concepts, and then we're going to go through all the questions that are being chatted up. We do appreciate all the questions that you're bringing. Thank you so much. So as always, you can find us at our community, mysolo401k.net/mycommunity. We have forums where people are posting questions 24/7. We have videos and webinars and a library there. We have these daily live webinars. We go live twice a day, once at 10 a.m. Pacific, 1 p.m. Eastern, and then again at 1 p.m. Pacific, 4 p.m. Eastern. You can always find the links at mysolo401k.net/webinar. It's always free to join. All are welcome. Let's spend some time talking about the top solo 401k benefits and features. Number one is fast account setup and funding. So we prepare the documents to create the plan within the same business day when someone signs up. And that's what creates the plan. And then our customers are free to open up their accounts at the bank or brokerage of choice. For example, a top brokerage option is Fidelity, where they're now opening up accounts online in a very streamlined process and as fast as one business day. Other great options are Schwab, local bank, credit unions. So there's lots of places. We've helped clients open up accounts at hundreds of different banks, many different credit unions, as well as those brokerage firms that I mentioned, just to name a couple. Now, why would someone want to open up a solo 401k? Well, there's multiple reasons, but one of the top reasons is the ability to make contributions. So a solo 401k plan, for example, has the highest contribution limits for any defined contribution plan available to self-employed individuals. For example, for 2024, the individual can contribute up to $69,000 or even $76,500 if they're 50 or older. For 2025, those limits were increased to $70,000 or $77,500 if they're 50 or older. Plus, if you're age 60 to 63, you have the opportunity to contribute up to $81,250. With our plan, you can make not only pre-tax contributions, which has the benefit of being able to reduce your taxable income now, but also you can make Roth or mega backdoor Roth contributions, where you'll have the potential for tax-free growth in the plan. You can maximize your savings with our low-cost solo 401k. So our plan is low cost for several reasons. Number one, flat fee structure. We charge $650, which is the initial establishment fee, plus the first $125 annual fee. Then starting 12 months later, so for example, January of next year, if you were to sign up here in January of 2025, our $125 annual fee will be due. That'll cover the second year. So it's a totally flat fee structure. So that includes all steps that are needed to open up accounts, roll over funds. We're answering questions, educational questions every day from customers, whether it's about investments or contributions. Plus, we provide comprehensive solo 401k compliance support at no additional charge. And we'll talk more about what that might include, but you can rest easy knowing that it's a flat fee structure. In other words, there's no asset under management fees. So regardless of how big your account grows to be, our fees are not going to grow or increase just because the value of your account increases. On top of that, our plan makes the self-employed business or individual eligible to claim $1,500 in solo 401k tax credits, which is going to more than cover our fees for the first 7 years. It's $500 per year for the first 3 years, and it's a tax credit, not a tax deduction. So it's a dollar for dollar reduction in the individual's tax liability. And then on top of that, as mentioned, we're neutral as far as where the accounts are set up at. At the same time, we're very hands-on in helping customers open up accounts. But many customers are opening up brokerage accounts like a Fidelity and Schwab, where they don't charge anything to open up the account. They offer free online trading, and they even offer a free checkbook associated with the account. Invest in what you want. That's another great benefit. And that's because of the features of our plan that allows for a wide range of investment options. That includes typical brokerage type investments like mutual funds, stocks, bonds, ETFs, FDIC insured CDs, as well as true alternative investments like real estate or private placement, private stock, precious metals, cryptocurrency, notes. Easy to use. So I've already mentioned Fidelity with their fast online setup, streamlined as well. It's like much more streamlined than the legacy paper process. Well, Fidelity also offers payroll integration with top providers like Gusto or ADP, Paychex, Rippling, plus many others. And through these payroll providers, solo 401k participants are able to set up automatic recurring contributions, automatic recurring loan payments. Another great benefit is the ability to access emergency funds, tax and penalty free. And this is because of the solo 401k loan feature, which allows the solo 401k participant to borrow up to 50% of their balance, not to exceed $50,000. Now, that's not going to be subject to taxes or penalties as long as it's properly structured as a loan. And we prepare the loan documents, which are required as part of our service for no additional charge, and then paid back according to those loan terms. Those loan terms are going to require that the loan is paid back in equal payments of principal and interest, payments spread over a 5-year term. The interest is going to be prime plus 1%. It's a fast process because there's no underwriting or approval, no credit check, there's no loan fees, and those funds can be used for any purpose whatsoever. It doesn't necessarily have to be an emergency. As I alluded to before, we provide comprehensive solo 401k compliance support, which is covered by our flat annual fee of $125. So what that support means is going to vary, but it's automatically going to include, for example, mandatory plan updates and amendments, and then additional services as needed, right? So you might be wanting to roll over more funds. So we provide unlimited free rollovers. The value of your account might increase to more than $250,000, in which case customers just have to let us know. So we'll add their plan to the queue to prepare the Form 5500EZ. You might process a mega backdoor Roth contribution. Well, that's going to require a 1099-R to be issued. Or you might take a distribution. That would also be another situation that would require a 1099-R. Well, we provide not only the 5500EZ, but also the 1099-R, preparation and electronic filing as an optional free service. In other words, no additional charge. We provide all this service via email, via phone. Again, we offer twice per day office hour style Zoom calls like this, where you can come and ask questions. You can hear what other folks are asking. On top of that, we have tremendous educational resources. We have a community with over 30,000 members. As mentioned at the top, online forums where customers are posting comments or questions 24/7. We have the industry's first solo401k.ai chatbot, which is a great way to quickly answer questions and find resources. So thanks for letting me lay the foundation. I want to go to the good questions that are being chatted up. As always, please subscribe so you get notifications. For example, tomorrow, the early session, we're going to start out with some prepared content discussing Roth solo 401k plans. The afternoon session tomorrow, we're going to have some more prepared content focused on solo 401k versus SEP IRA. Of course, we'll always have an open session as well with Q&A. Later this week, we're going to kick off our annual deep dive contribution webinars. So please look out for that. So if you subscribe to the YouTube channel, you'll always get those notifications. For example, the deep dive content that will be available later this week, the plan is to go deep on all the ins and out, A to Z, how to make contributions, contribution limits, all the mechanics, specifically focused on a business taxed as an S corporation. And then future sessions, we'll be talking about other self-employed business structures, right? Sole prop, partnership, etc. We'll be talking about in future sessions the mega backdoor Roth A to Z. We'll be talking about our magic number sessions. In other words, okay, what's the magic number? How much income do I need to be able to maximize contributions? So these are the sessions that we host every year. We get a lot of great feedback about it. So that all starts here this week. You subscribe to the YouTube channel, you get all the notifications. All right, thanks for posting questions. Yeah, you can post it on YouTube, you can post it in the StreamYard, post it on LinkedIn, post it on Twitter. So if you go to our forums page, mysolo401k.net/forums, we've got all the different forms that customers use to provide us the information we need to prepare the 1099-R. So it'll vary depending on what the circumstances are, whether it's a taxable distribution versus a transfer to another retirement account or an in-plan conversion. So we've got them broken out there. You helped me open a Schwab brokerage account attached to my 401k. Do I need to tell you what funds I transferred to this brokerage account? So you don't. So when one makes contributions, so there's two ways to transfer money to the retirement account. One is to make contributions. Another is to transfer funds from another retirement account, like a former employer plan or an IRA. So whether you're making contributions as 401k contributions from your earned self-employment income, or whether you're making rollover contributions, so you're rolling money over from another retirement account, in either case, that's not going to be reportable by the plan. So customers don't have to let us know, just based on the mere fact that they process those types of transactions. Now, if you are having to file a 5500 EZ because the value of your plan exceeds $250,000, for example, well, that does need to be reported on the 5500 EZ. And as part of our online process to gather that information, we ask about, okay, rollover amounts, contribution amounts, etc. If I want to roll over an existing self-directed IRA, would you help with that process, and what type of assets can I roll? Well, really, what you can invest in via self-directed IRA is going to be the same type of investment you can make with our solo 401k plan. So if you have alternative investments in that self-directed IRA, our plan would certainly allow someone to roll those assets over in kind. Now, of course, anytime you're transferring from an IRA, it has to be a non-Roth IRA. So if you have a self-directed Roth IRA, you can't transfer assets over or cash over or anything over from a Roth IRA to any type of 401k, including a solo 401k. So assuming it's not a Roth IRA, then you could transfer over that traditional IRA. It would go over to the pre-tax solo 401k account. Now, if it's going to be an alternative investment that you're transferring, there's a couple of additional considerations. So first of all, the self-directed IRA provider will have to report that transfer to the IRS on a 1099-R. You'll have to tell the IRS via that 1099-R that you transferred the assets over to your new employer plan, your solo 401k. And that's not a taxable event, but it's still reportable. And they'll need to list the value of the assets transferred over. So they'll need to know the value of those assets. Now, if you're transferring over assets in kind, they'll need to be retitled, right? If it's alternative investments, those investments are going to need to be retitled under the name of the solo 401k. Let's say it's a private placement, right? The individual would have to let the investment provider know, right? Whatever entity or structure they're investing in will need to know, okay, well, I no longer hold this investment in my IRA, right? Typically, that would be held in the name of the IRA custodian for the benefit of your IRA. Well, that title is going to have to be changed now to your solo 401k. Number two, of course, you want those dividends going forward to go to your solo 401k. So they need to know, okay, well, where do I send the dividends to, right? It'll go to your pre-tax solo 401k account. For example, your pre-tax solo 401k bank account. So they can say ACH the dividends over. So they'll need to know also the EIN number of your solo 401k, because oftentimes that self-directed that investment provider is going to be doing tax reporting to all the investors. So that going forward, say that K1 that might be issued with respect to your investment is issued now to the solo 401k under the EIN of the solo 401k. So as part of the onboarding process, we obtain an EIN number for the solo 401k. So now the IRS understands that this EIN number is associated with the solo 401k or with the 401k, so that to the extent that investment provider is doing any tax reporting going forward, the IRS will understand that the income reported with respect to that investment is growing inside of a 401k on a tax-deferred basis. I pay my spouse in tax-free benefits only under a Section 105 health reimbursement arrangement. Can an employer contribution be made on the basis of this benefit value? Probably not. The spouse can participate in the solo 401k if they're working in the business and reporting their own earned self-employment income. So if they're not reporting any earned self-employment income, for example, if it's an S corp, the spouse receives a W-2 from the S corp, or maybe the spouse has their own separate Schedule C, right? And then the spouse is able to participate in the plan and make contributions based on their earned self-employment income. They don't have any earned self-employment income. There's going to be no basis for them to participate. There's going to be no basis for them to make contributions. Can I write a check for my Schwab brokerage account, or do I have to return the funds to Solera Bank attached to my solo 401k? I'm not sure what the context is exactly, but I'm assuming you're talking about making an investment. So if you're trying to make an investment, it's certainly acceptable from a solo 401k perspective to make the investment from the brokerage account that was opened up for the solo 401k. And as we talked about, for example, Schwab, Fidelity, they issue free checkbooks associated with that account. So if the investment provider will accept the investment made via check, there's certainly acceptable to make the investment by writing a check from that Schwab brokerage account. Now, sometimes the investment provider will want the investors to all ACH their investment funds. And it's not possible to ACH funds out of a brokerage account that was open for the solo 401k. Fidelity doesn't allow it. Schwab doesn't allow it, for example. But if you have a bank account that was opened up for the solo 401k, you could certainly ACH funds from that bank account that was opened up for the solo 401k out of the account to the investment provider to make that solo 401k investment. Can you split a single bank transfer between an employer and employee contribution, or do you need individual transfers? So if one is making both pre-tax employee as well as pre-tax employer, it's acceptable to make that deposit to that single pre-tax solo 401k bank account via one transfer. Now, it would be good to document in the records that that one transfer covered both types of contributions, but that's acceptable. I set up my solo 401k account, sole proprietor, mega Roth in 2024. I made a voluntary contribution of about $3,000 in December 2024. Do I have to file any tax forms for 2024 with the IRS or with you? My interpretation of your documentation seems to say that I don't have to file anything. Can you confirm? Thank you so much. So when one makes a mega backdoor Roth contribution, it's really a two-step process where the contributions are first deposited into an after-tax solo 401k account and then transferred from the voluntary after-tax account to a Roth solo 401k or Roth IRA. So that first step, the contribution, is not reportable on the personal or business tax return. The second step, when you move the funds from the after-tax to either a Roth solo 401k or a Roth IRA, is reportable on a Form 1099-R. And we have forms on our website that customers use to provide us the information that's needed to prepare the 1099-R. For example, there's one form for customers that are moving funds from an after-tax solo 401k to Roth solo 401k, and then there's another form for moving funds from an after-tax solo 401k to a Roth IRA. That's how we capture the information that's needed. So that's going to be reportable for the year of the transfer. So if the funds were not transferred from the after-tax solo 401k to, say, a Roth solo 401k until 2025, it wouldn't be reportable until 2025. In other words, it would be reportable on a 2025 1099-R. For single member LLC with spouse employee regarding employer profit sharing, I can only contribute 20% of net self-employment income. Is this amount split between owner and employee? Or can I make a 20% employer contribution for each of us? Does this contribution percentage need to be the same for both of us? So no, our plan documents, first of all, don't require that the employer contribution percentage be the same for both participants. Now, each participant will need their own separate self-employment income, such as their own separate Schedule C to justify their respective contributions. So you could do, if each spouse has their own separate self-employment compensation to justify those contributions, each spouse could get 20, one spouse could get 20, and one spouse could get 0, et cetera, et cetera. I want to deposit my 2025 employee contribution, but have yet to determine my employer deposit. Do I have to wait until I deposit my employer before making my 2025 employee? So no, one does not necessarily need to wait until they've finished making their 2024 employer contributions before they start making their 2025 employee contributions. Of course, they just want to be confident that they will report the self-employment income to justify that 2025 employee contribution so they don't end up in an excess contribution scenario. Can you walk through how an employer contribution to a Roth would be reported when filing for taxes? For reference, my business is an LLC taxed as a partnership with 2 business owners. If I understand correctly, I deduct the employer contribution from the business income on 1065, then need to issue a 1099-R to myself to report the income the following tax year on Form 1040. So yes, when one makes an employer contribution as a Roth contribution, per the IRS guidance, that is tax deductible on the employer's tax return for the year for which the contribution is made, but is taxable to the employee via 1099-R for the year in which it is deposited. So you would submit the online form on our website for pre-tax to Roth conversion, because that's effectively what the individual is doing. It's as if they made an employer pre-tax contribution and then immediately converted it from the pre-tax account to the Roth account. Now, you don't have to literally put it into the pre-tax account before you move it to the Roth account, but from a reporting perspective, it would be no different than that. So if you go to mysolo401k.net/forms, you can find that applicable form for pre-tax to Roth conversion. So let us know about that. I know that the credit for small employer pension plan startup costs is typically not available for the solo 401k. Exactly, because a solo 401k plan by definition will not have any non-highly compensated employees participating in the plan. So there's no way to qualify for the startup cost credit for a solo 401k. Doing a transfer from old 403b to solo 401k at Fidelity. I have a check from the 403b made out to the trust. Do I simply deposit it into the Fidelity solo 401k account, or is any process paperwork that I need to follow? No, you're exactly right. It would just be deposited into the applicable solo 401k account. For example, the pre-tax solo 401k account. What is the maximum amount of hours a part-time employer may work and still qualify as a company owner? Well, the solo 401k participant, the self-employed person, can work as much as they want. The key is not having any non-owner, non-spouse, full-time W-2 employees. So that would be employees that are working either 1,000 hours per year with a year of service or 500 hours per year for 2 consecutive years. What paperwork do I need to file so that the transfer isn't counted as a distribution? Well, the key is that the administrator of the former employer plan understands that you transferred the money to your new employer plan, so that they tell the IRS that this is a non-taxable direct rollover by issuing Form 1099-R with the code G in box 7. And that's why you want to keep that good records, that's what you told the administrator of the former employer plan, so that if they end up misreporting it, for example, as a taxable distribution, you can go back to them, point to that paperwork so that they will correct that 1099-R. So it gets properly reported to the IRS as a non-taxable direct rollover. It depends on how the self-employed business is taxed. So the employer contribution limit is 25% of W-2 wages. For example, for a business that is taxed as an S Corp or a C Corp. For a business that's taxed as a sole proprietorship, right? It could be a sole proprietor, a single member LLC. that's taxed as a sole proprietor with income reported on Schedule C of their 1040, you first have to run a preliminary calculation where you take your net income reported on line 31 of Schedule C, less 1/2 of the self-employment tax. Of that number, the individual can contribute 20% of that amount as an employer contribution. If the business is taxed as a partnership, you would take line 14 of the K1, less 1/2 of the self-employment tax, and then 20% of that number can be contributed as an employer contribution. For all types, you want to make sure that the sum of all contributions made to the solo 401k, whether employer, employee, and or voluntary after tax, does not exceed the lesser of that self-employment compensation, whether it's W-2 wages or line 31 in Schedule C, less 1/2 of the self-employment tax. You want to make sure that the sum of all those contributions to the solo 401k does not exceed the lesser of self-employment compensation or the overall limit. Can I make additional voluntary 2024 tax year contributions before April 15, 2025, up to the $69,000 limit? Net business income is going to exceed $100,000. Yes, assuming that no other contributions were made to the solo 401k, and assuming that you have at least $69,000 of self-employment income, which you certainly would if line 31 of Schedule C is more than $100,000. Yes, you can make 100% of the solo 401k contributions as voluntary after-tax contributions. There's no requirement, for example, to first make employee or employer before one starts making voluntary after-tax contributions. It's not a waterfall. You can go right to those after-tax contributions. You pay taxes on after-tax contributions because it's not reducing your taxable income. So, for example, if someone makes pre-tax contributions and their business is taxed as a sole proprietorship, those pre-tax contributions, whether they're employee or employer contributions, are reported on line 16 of Schedule 1 of their 1040. So ultimately, it'll reduce their taxable income. But if one makes after-tax contributions, it's not reportable. It's not reducing any income. So the individual is going to end up paying taxes on that self-employment income that's used to justify those contributions. That looks like it takes us to the end of the questions that have been chatted up so far. Thank you so much for the great questions and participation. Please continue to participate. Whether you come to our forums 24/7, whether you participate in these daily webinars, you can always find the link at mysolo401k.net/webinar. Please like, please subscribe so you get all the notifications. No, because the spouse is going to be considered a highly compensated employee by virtue of being the individual's spouse. Yes. So if somebody makes an employer contribution as a Roth contribution and it's deposited into that Roth account in 2025, but it's made for 2024, it's going to reduce the taxable income on the 2024 tax return, but then is taxable to the employee on their 2025 1040. So the 1099-R will be issued for 2025 by February 2026, and then the amount added to the 2025 tax return. So it's as if they reduce their income on their 2024 tax return and then add it to their 2025. So they're punting it from one year to the next. Yes, by virtue of you being the owner of the business. So it's not just based on income, it's also based on ownership. I see. You want to write a check on your brokerage and be a distribution. How do you pay taxes? So you could pay those taxes by signing up for an EFTPS account, or you could use the one-time wire process. When one makes a taxable distribution from their solo 401k, first of all, they need to be eligible to do that. So you got to be, for example, over age 59 and a half. There's going to be a 20% withholding requirement where 20% of the amount distributed needs to be withheld and paid through that EFTPS system by the 15th of the month following the date of the distribution. So what some folks will do if they're eligible to take a distribution, that also means they're eligible to roll over funds. So they may, instead of taking a taxable distribution from their 401k, what some individuals do is they just transfer the money to an IRA, because there's no withholding requirements when you take a taxable distribution from your IRA. Here's a good launching page for considering taking taxable distributions. If you use our calendar, mysolo401k.net/book, you're welcome to book a phone call. Yeah, it depends. If you go to forms, you can see the different links, whether it's an in-plane conversion or a taxable distribution, for example. So if you just go to mysolo401k.net, let's see, forms/forms, it'll take you there. We appreciate all the chance to discuss these topics. Thank you so much for participating and bringing the great discussion. Again, please like and subscribe on YouTube so you get all the notifications of all the upcoming content. Well, it really runs the gamut. I mean, there's individuals that are investing in precious metals, private placements, private stock, notes, just to name a few. Fortunately, the IRS rules don't prescribe a list of things that one can invest in. Otherwise, we'd probably still be waiting for them to allow investing in crypto, just because the regulators just trail the market. Give it another moment here to see if any more questions trickle in. Yes, it's possible. Now, you got to be careful if you're investing in personal property, because that can be construed as a business. So if one is investing, and you might run up against licensing requirements in some state, like say somebody's trying to invest in vehicles, right? Well, some states may say, well, you got to be a dealership if you're going to buy or sell a certain number of vehicles. And then then the question becomes, oh, is that really business income that's accruing inside of your 401k? And if you have business income inside your 401k, then the 401k might be liable to pay unrelated business income tax, which is very high. It can go all the way up to the trust tax rates. Doesn't mean that it's prohibited necessarily. It just means that the return on the investment is going to be greatly diminished. It's going to be based on each person's earned self-employment income. So for business tax as an S corp, that's going to be their W-2 wages. So 20% of their W-2, or excuse me, if it's a business tax as an S corp, then it's going to be 25% of their W-2 wages. If it's, let's say each person reports on Schedule C, their own separate Schedule C, they would take line 31 of their separate Schedule C less 1/2 of the self-employment tax, then it'd be 20% of that amount, assuming that the total of all the contributions made to the solo 401k, whether employee, employer, or after tax, doesn't exceed the lesser of that self-employment compensation or the overall limit. It's possible to roll over in stages. Yes, you can do a partial rollover, say of the cash, and then later do the asset. Awesome. Well, you guys have been great. Thank you so much for the good participation. Until next time.